Traded with emotion. Let's trade. What up, man? Welcome to Trading with Emotions. On this episode of Up, Down, or What? There's a bullish, a bearish, and a neutral chart, okay? Obviously the most practical one that we want to play safe with and make good decisions, okay? Because that's what this channel is all about, making good decisions. But first, I'm not a financial advisor, so please don't take this seriously. Jesus. Okay, yeah, let's get to it. All right. The bullish chart is first because, no, actually, fuck that. Bearish chart first because fuck the bears. Nah, just kidding. You gotta be a bear sometimes, okay? Like, I'm a very, very skeptical trader, so I try and kind of look at things from every fucking perspective. But yeah, I mean, I'll give you the why I believe these scenarios will play out the way they will. All right, let's get it. The bearish chart, baby. Yeah, so is a possibility, right? We could go all the way down to the teens. Do I think that's gonna happen? No, I don't. If you remember my cycle song video, you remember that blue pattern. We can take this pattern and place it 2 months apart, and it's coming up. It's coming up. It's either going to play out inversely, identical, or a mix of both. And you can check me on this, man. If it plays out exactly the same as it's been playing out the last two phases, just validates the cycle theory even more. Check me on that. We'll see how it goes, but I think it'll play out exactly the same. I think we're going to get a bounce. I believe that there is a cycle just because it mathematically aligns, or at least my interpretation of the cycle. Because there's a lot of theories out there, and props to everybody for coming up with these theories. But I think everybody should kind of give their objective views on this thing. So yeah, stay skeptical. All right. The bull chart. Why do I like this chart? I mean, this chart is awesome. Typically with a bullish scenario, I will kind of go a little bit extreme since we are kind of expecting that squeeze, right? What would the squeeze look like if it happened this week? You can actually find the squeeze before it happens, and I'll show you. If you remember that green pattern, the one that stretched out on the cycle song, that was the projector basically. I do have a theory as well with this. There's something called the fast Fourier transform. This is typically used in like sound engineering and with sound waves, but you can apply this to stocks. Basically what it does is it finds unusual spikes within a normalized pattern. And that's typically how I was able to find these patterns that almost look identical to each other, stretched out or shrunken, but the ratio is always the same. And that's very, very important because when you find these patterns, you can kind of speculate that something might happen the same way. If you actually take the blue pattern and stretch it out, it'll reflect on what was the June run-up, right? I'm not going to call it a squeeze because it wasn't a squeeze, but you place it throughout the entire chart. It's either inverted, which brings the price action down, or it's identical, bringing the price action up. And that's just crazy, man. But yeah, anyways, going back to this bullish scenario, we're able to break down a pattern found in the cycle that is likely to repeat itself, which right now is the blue pattern. Okay, well, maybe there's a possibility that we will squeeze this week, even though the technicals don't look promising, right? Because with AMC, it's just always hit or miss, but technicals don't always play a role. All right, so we have our final chart, the neutral chart. Okay, so I do think that the blue pattern will be playing out. I think that we are going to get a run up midday on Wednesday. I think tomorrow we're going to be trading kind of sideways. In the morning, I think we will drop a little bit and then trade sideways. Towards the end of the day, we might get a small spike, and then going into Wednesday, we will get a run up. And I think this run up, I mean, it just remember here, we've been on a downtrend for a long time. There's very, very little room for AMC to keep going down. I don't think the hedge funds necessarily want this either, because when the price goes down too much, the price becomes very, very attractive to traders. And then at that point, you get crazy volume coming in, causing the squeeze. So I think even these hedge funds know that, and they kind of have to play both sides too, believe it or not. They play both sides. They go long, they go short. The reasonable thing to do here would be to start covering some shares, bring the price all the way to like 30 or 33, and then bring it back down on Friday, which is typically what they do. On the cycle song, I talk about delta hedging and how they manipulate the price action through the option chain, which I very much believe in. If you look at that video, I did lay out the flag structure and how a flag structure works sometimes with manipulated stocks. And that is that each time they get closer and closer to these very important option expiration dates, they're trying to minimize their losses by doing this. So what they do is manipulate the stock in a way that they have a net zero or as close to net zero so that they, minimize their losses. And this goes both ways. Remember, they can be selling puts or they can be selling calls. At that point, you got to hedge for both. So if they're going long this time, they can actually be bringing the price up, tricking retail traders that, AMC is going to 15, psych, and then boom, it goes all the way up to 35. So like I said, I think this is going to go to maybe the $30 to $33 level. We might even go a little bit higher. And then by end of day Thursday, they might drop it again to 30, and we might end the week at 30. That's just my opinion. It is a quadruple witching month, so the 17th is extremely important. There's a lot of calls out of the money. There's a lot of calls in the money too. Not as much out of the money, unfortunately, but there are still calls in the money. And typically, hedge funds will hedge these positions early on, but sometimes they don't, and they wait till the week of to see if the price action will go lower. Since it is a quadruple witching date and there are more contracts in the money than, on your typical weekly options, this is a little bit different. Some hedge funds might have to cover these positions and drive the price action up. All right, guys, if you like this video, give it a thumbs up, subscribe. See you guys next time.